And joining us right now to talk more about the Fed and the markets, we want to get right to our first guest of the hour, Peter Orszag. He's the CEO of Lazard and the former director of the Office of Management and Budget under President Obama. Peter, let's jump right into it. What we heard from the Fed yesterday, it does seem to be signaling game on to the markets.
Yeah, absolutely. Look, I think what's happened both this year and last year is that people get a little confused by what is very likely to be seasonal factors in January and February. So about a year ago, Robin Brooks, who's now at Brookings, and I predicted that inflation would come down significantly during the year, despite the fact that if you remember back to about this time last year, there were similar concerns about, are we going sideways and has the progress stopped? It wasn't correct then. I don't think it will be correct now either. And I expect that inflation will continue to show a downward trajectory. So I think the Fed is correct, and this is what you basically heard from Chair Powell yesterday, to kind of look through the January and February numbers to the glide path and the ongoing declines in inflation. The other thing that's happened, though, is...
go ahead.
Oh, sorry, go ahead.
Go ahead.
I was going to say the other thing that's happened, though, is if you remember when I was on with you from Davos, at the time there was all this expectation that there would be 6 rate cuts, multiple rate cuts. What's happened in the meanwhile is the market has caught up to where the Fed always was going to be, which was not starting till at the earliest this summer. And I think the gap between the market and Fed reality has narrowed substantially, which is a good thing.
Let's just say, though, that you've got another hot read in March. Would that push the Fed off from saying, OK, we can't do it in June, maybe not July, maybe August or September would be, I don't even know if there is a meeting in August, but September may be a more likely play out?
Yeah. Look, I think the central expectation, which is in line with the market at this point, is for the rate cuts to begin this summer. But I would say there's a higher probability that the odds are higher that it will be pushed off, and it might be 1 or 2 cuts, not 3.
So what we're seeing in the market...
For exactly the reason that you hypothesized.
So what we're seeing in the market is excitement, maybe partially to do with the Fed, maybe partially to do with other things. Like if the Fed doesn't even get to 3, and does that impact the market? Or what's driving this? How much of this is AI? How much of this is people thinking, OK, there's going to be a soft landing?
Well, the timing of yesterday clearly was linked to the Fed. So, I mean, I think what's happened is the Fed, if you read between the lines, if you read through, the Fed did what I think it should have done, which is to say, don't worry too much about the last 2 inflation reads. It looks to us like these were disproportionately affected by seasonal factors. Chair Powell was careful to say that you don't want to be interpreting the data in the way that, you find the most favorable. But nonetheless, if you listen to the tone of what he was saying and even the words of what he was saying, I think that's the takeaway, which is their view is that this is most likely a blip, and I agree with that.
The IPO market seems to be heating up. We've got Reddit today priced at the high end. Mm-hmm. There was a big IPO yesterday. What about the M&A market? That's one that you know really, really well.
Yeah, I think the M&A market, and I'll be careful because we're in our blackout period for our earnings, but the M&A market turned towards the back half of last year because many of the headwinds that were most pressing on the market started to fade. So financing markets started to open up, and you can actually view the IPO market reopening as the next stage of. First, there were financing markets that reopened, which was happening, over the past several quarters, and now the IPO market. So that's one headwind out of the way. Another really significant one is the way that boards and C-suites look at antitrust, because we've had this big is bad movement. There have been a series of court losses by the government, and there are more companies that are willing to kind of take their chances and roll the dice in court. So that's also been, a slight alleviation on a headwind. And yes, the M&A market has been picking up since last year.
How much of the willingness to take things on from the C-suite is the idea that there could be a new administration coming in? Do you think a new administration would make it easier for M&A? Or there were some problems with M&A when Donald Trump was president last time around, too?
Yeah, look, what I would say is Traditionally, if you look back over history, when you move from a Democratic to Republican administration or vice versa, there is a change in antitrust policy, more pronounced, by the way, at the Department of Justice than at the Federal Trade Commission. And that's not surprising given the bipartisan nature of the commissioners at the Federal Trade Commission. But you would expect, based on historical patterns, that moving from one party to the other does have some effect on antitrust. But what I would say is, regardless of whether there is a shift or not, the courts are the ones that are going to be interpreting the law. None of the laws here have changed. So all that's changed is the way that the antitrust authorities are interpreting the law. And we have a series of court cases even this year that are also going to be quite important in demonstrating one way or another how the courts interpret those laws.